Hello, everyone, and welcome to SCORE Fairfield County's live webinar on finding funding. This is another in our series on running a business post-COVID. I'm Steve Smith, a business mentor and co-chair here at SCORE Fairfield County, and I'll be your host today. Our presenter is Joe McCaffrey. I'll tell you a little bit more about Joe in just a second. But first, I want to thank First County Bank for sponsoring this webinar. First County is one of our very longtime supporters of SCORE workshops and webinars and continues to provide opportunities for the education of small businesses in Fairfield County. They have branches throughout Fairfield County. So some useful information about today's event. We've set aside time for Q&A at the end of the presentation. And if you have a question, please use the chat window at any time. It's located in the lower part of your screen, and I'll be monitoring that and make sure that we get as many questions in as we can at the end. The end will be at 1 o'clock sharp with respect to your time. The session is an important point because this is usually the number 1 and number 2 question, so important point. The session is being recorded, and the link to the recording will be available in the next couple of days, probably tomorrow, if I have anything to say about it. So some brief information about SCORE. A lot of you know this. It's a national organization, part of the Small Business Administration. In Fairfield County, we have over 135 volunteers, actually 134. And we have a wide range of industry, process, and subject matter expertise. There are 3 core value-added services that we offer. One is free, of course, one-on-one counseling. Now during COVID, it's telephone, email, and video, which can be accessed via Request Mentor tab on our website. That's the Request Mentor tab on our website. Educational workshops will be started sometime in the future, but today we're all on webinar, and we offer them several times a week, at least 3, I would say. Third point, extensive resources are available on our website with subject matter expertise and templates to help you build your business plans, financial projects, etc. Changing direction just a bit here. Our next webinar is on Tuesday, May 26th, and it's a beginner's guide to bankruptcy. I don't want to editorialize on this, but the bankruptcy rules and regulations in the United States can actually be a springboard to getting restarted. Please check out our website. Today's webinar about funding is about funding. It's built on our May 11th webinar about tactics and actions to adopt to get out of COVID-19 environment. Now to our speaker. Joe McCaffrey is a business advisor with Community Investment Corporation. He is also a certified business mentor with SCORE. Joe has launched several small businesses and previously served as an executive for a public company in the real estate industry. So now I'm going to turn it over to Joe. Joe, it's all yours.
Hey, thank you, Steve. Good afternoon, everyone. It's a pleasure to be with you all today. Again, my name is Joe McCaffrey. For the next 20 minutes or so, I'm going to walk you through some of the financing resources of the Small Business Administration, and then we'll use the remainder of the hour to answer your questions. In addition to being a volunteer mentor with Fairfield County SCORE, my day job is working as a business advisor with Community Investment Corporation, and I'll explain what my job entails in a little bit. Let's just move this along here. There we go. But first, Community Investment Corporation. I'll tell you a little bit about us. We are a certified development company, CDC, which is a nonprofit, not-for-profit organization licensed by the federal government to administer the SBA's loan programs. Our mission, quite simply, is to promote economic development. That means we want to see your business expand and be profitable so you can afford to hire new people, invest in the local community, and pay taxes. Paying taxes is actually a good thing because it means you're making money. And the way we support economic development is by helping small businesses get the capital they need in order to succeed. Every business needs money, right? But finding it isn't always easy to do. This is where the SBA comes in. The SBA is the small business owner's best friend, especially if you need to borrow money, and you'll see what I mean shortly. I usually say the SBA doesn't make loans, but I had to add an asterisk to this because it isn't entirely true. The EIDL, or disaster loan, is an exception. I'm going to talk a little bit about EIDL a little later, but let me address the most popular EIDL question right now. I know many of you are still waiting to hear back from the SBA, so let me just say, no, I don't know when you'll be getting your EIDL money. I know you've been waiting a long time, so is everybody else. You just have to be patient, okay? Things are a little different right now, but again, Uncle Sam usually doesn't make loans. Instead, the SBA provides a guarantee on part of the loan, which reduces the borrower's credit risk, making lenders more willing to issue the loan and at more favorable terms than you could obtain on your own. A point worth noting is that the SBA is part of the federal government. And as such, these aren't the easiest deals in the world to do. At CIC, our job is to know how to get SBA approval on loans. The SBA standard operating procedure is similar in structure to the Internal Revenue Code, whereby things have to be done a very particular way. Getting SBA approval on a loan is kind of like trying to do your own taxes without the EZ form, and you always get audited. That's kind of what it's like. Again, our people are experts at this sort of thing, and we know how to get these deals done. There are other mission-based lenders out there, and there are similarities between the various companies, but let me touch on some of the differences. Every business is unique, and they have individual financing needs. CIC has loan programs for all purposes and sizes, ranging from $5,000 to $5 million. Whatever your needs are, CIC operates with a collaborative client-first mentality whereby we'll put you in touch with the best people to help you, even if that means sending you to another mission-based lender. If we can't help you, we'll help you find someone else who hopefully can. Okay, so let's get into the meat of today's discussion. CIC offers 3 different loan programs, and you can have multiple types of loans if you want. The first type of loan we offer is called the SBA 504 loan. Under this plan, you can borrow up to $5 million for the purchase or refinancing of fixed assets, such as real estate and heavy non-movable equipment and machinery. The way it works is that CIC partners with the small businesses banks on these loans. And if you need to find a bank, we can help you find one that specializes in your type of deal if you need that help. One of the nice features of this loan is that it usually only requires a 10% down payment. It's a little bit higher for special use properties and startup companies. The way it works is you put up 10%, the bank puts up 50, and CIC puts up the other 40. There are 2 lenders on these deals, so the borrower has a separate loan with each lender. And CIC eventually, our piece gets sold to bond investors. This is where the SBA guarantee comes into play. The federal government guarantees the performance of that bond. Current interest rate can be as low as 2.76%. That's on the CIC piece. I know it says 2.88 there. It went down. And by the way, this is the lowest that anyone has ever seen this rate. It's ridiculously low right now. So the timing to do a 504 probably has never been and probably may not ever be as good as it is right now. Interest rate is fixed for up to 25 years with no balloon, but there may be a prepayment penalty during the first half of the loan. Again, these loans get packaged together and sold to investors who want you to make the regularly scheduled payments. They don't want you to pay it off early. That's why they bought the bond. They want the coupon, basically. Borrower must be at least a 51% occupant of the building, so we can't finance speculative investment properties. I get asked that question a lot. In summary, this is a really great program. The 504 is a terrific program, and you'll find that in many cases, it makes buying the asset cheaper than leasing it. Okay, the next type of loan is called the Community Advantage Loan, which is part of the SBA 7A program. 7A is the most popular SBA loan. Interestingly, the PPP loan, which everybody has heard about ad nauseum in the press nowadays, I'm going to talk a little bit about that in a little bit, by the way. But that's also a 7A loan. These loans are for small businesses primarily, and underserved areas that do not qualify for either a traditional commercial loan or a regular SBA 7A loan that you get directly from a bank. So these are for B caliber, unbankable, or not yet bankable borrowers. What that means is you have to either be denied by a bank or discouraged from applying in order to qualify for this type of loan. If you need money, always start with your regular bank, but if they turn you down, come see us. That's the way it works. By the way, we're the only CDC in Connecticut that offers SBA Community Advantage loans. So banks usually refer their disqualified borrowers directly to us. So if you talk to the bank and they say no, they might say to you, hey, go see CIC. You can borrow up to $250,000. You can use the loan for just about anything as long as it's legal. For example, these are federal loans, so we can't finance businesses involved, let's say, like in the marijuana industries, because that's not federally legal. The term of the loan can be up to 10 years. Even though these loans are sold to investors, there's no prepayment penalty on these, which is nice. Interest rate, that's prime plus 3.75%. It's an attractive rate, but again, you can probably do better if you deal directly with a bank. So if you can get a commercial loan or a regular 7A, go for it, save the money. The CA loan requires a 20% equity injection. For example, if you want to borrow $100,000, you have to show that you've already spent $20,000 of your own money before we'll give you the loan. Okay, and the last type of loan that we offer is the microloan, which is what most companies start out with. You can borrow between $5,000 and $50,000 to launch or grow your business. The current fixed interest rate is 8 1/8%. This is a term loan. It's not a revolving line of credit of up to 5 years with no prepayment penalty. If you need a bank line of credit, I saw on First County Bank's website, who is our title sponsor for today's webinar, by the way, that they offer a product like this. So check that out if you're interested. If you can't get a revolving credit line from your bank, a credit card, preferably in the name of the business, may be your only option. And for businesses that are just starting out, after the owners deplete whatever cash they may have, some people use personal credit cards and even their home equity line of credit to provide financing for their business. As I said previously, finding money can be a challenge. Unlike the 504 and CA loans that go sold to investors, CIC keeps the microloans on our books. So because we're on the hook for these loans, we have an incentive to make sure your business succeeds. So we assign a free business advisor to work with you for the life of the loan, which is me. That's my job. And I regularly collaborate with other business advisors from the SBA resource partners like SCORE. So you can have multiple business advisors working with you if you like. We also have what's called our Micro Now program. We can borrow up to $15,000 on a fast track basis. And what that means is we can usually get these deals approved within a week or two. We've been turning these around lately in about a week. As a baseline, you generally need at least a 600 credit score in order to qualify for a 504, CA, or regular microloan. But for the Micro Now loan, you need a minimum credit score of 675. And that's not flexible. It's got to be 675 or better. Micro Now, it is a quick cash program with minimal underwriting that's reserved for people with good credit. Speaking of which, underwriting standards, which essentially means loan qualifications, as well as business terms, vary by microlender, so it's a good idea to shop around. Because I'm a SCORE mentor, I'm required to provide multiple alternatives for your consideration, and you're free to choose whoever you want to work with. One company is CEDF. They're another economic development. They offer SBA microloans. They get most of their money from the state and private groups, so they offer a different suite of loan products. Headco is another firm that focuses mostly on the Hartford area, but they have some statewide loans and grants, including a revolving line of credit. Okay, so one other thing you need to know is that you set up a separate entity for your business to insulate yourself from legal liability, right? Well, this principle doesn't apply when you borrow money. These are all secure loans that require a personal guarantee, in most cases, pledging of your personal assets. Uncle Sam doesn't like to lose money, neither does CIC, because we're not a bank, we're an economic development not-for-profit lender. So therefore, we're going to put a lien on your business and personal assets to make sure you perform on the loan. I'm just kidding about the dog, the family dog, but I originally had Spouse in there, but I figured somebody would say, well, you can have him, he's good for nothing anyway, but But you get the idea. You know, only borrow money from anyone if you're certain you can pay it back, because this is not free kind of thing. Okay. Okay, I saved the best for last. And real quickly, let's talk about the CARES Act. You're probably already familiar with some of these programs. Let's start off with the first one. The disaster loan helps you recover from a business interruption like the coronavirus by providing working capital for business continuity. PPP is primarily an alternative to unemployment. It's intended to be used for payroll, utilities, occupancy-related expenses, that kind of thing. Employees receive 75% the benefit of this program, and the employer receives 25%. Now, I know there's talk about changing this. That's a hot topic right now. But for now, PIP is primarily a benefit for workers. And this is important. The PPP is a loan that has the potential to turn into a full or partial grant if the money is used for allowable purpose. You know, for whatever it says they can use it, you can use it for. This is the part of PPP that has everyone nervous right now, because there's a lot of unanswered questions. People are wondering, can I do this? What about that? The SBA just published the forgiveness form. It came out on Monday, I believe. Everything you need to know is on that form. If your situation fits into the forgiveness model, what I've been telling my clients is you're probably going to be fine. The person who's going to determine your forgiveness is your bank, so it wouldn't be a bad idea to run it by them as well. Okay, number 3, if you don't want to do a PPP, you can put your people on unemployment, which is administered by the State Department of Labor. Benefits can be received for up to 39 weeks, which is 13 weeks longer than usual. The federal pandemic unemployment compensation is the $600 weekly booster payment that runs through the end of July. And then we recently added the Pandemic Unemployment Assistance Program, which allows self-employed business owners to receive unemployment benefits, which usually isn't the case. That's new. And Connecticut also has a thing called a shared work program that provides partial benefits if employee compensation is reduced. So you don't have to be completely out of work. You can get partial benefits. If you're interested, check out the DOL website for more information about those programs. Number 4, this is something not a lot of people know about, and it was a big surprise to the people in my company when it was announced. In fact, we couldn't believe it. If you presently have an SBA loan, Uncle Sam is making your loan payments for you through September. Understand, this is not a loan forbearance or deferment. We eventually have to make up the skip payments. The next 6 payments are being made for the borrower by the federal government, and it's tax-free. Okay, this is going to be a huge help for small businesses. Now, I know what you're thinking. You're wishing you had an existing SBA loan, right? Well, it gets even better. Look at number 5. This also applies to all new loans made within the first 6 months of the CARES Act being signed. So if you take out a loan between now and 9/27, Uncle Sam will make your full payments for the first 6 months of the loan, which include principal and interest. Again, your loan payments will be made for you in full, and you don't have to pay any of it back. If you need a short-term EIDL bridge loan, the Micronow loan is a great solution because the government will make your first 6 payments on that loan too, which will enhance your cash flow flexibility. Not only won't you have to make any payments for the first 6 months, the principal reduction on that loan during that period effectively becomes a grant. Remember what I said earlier about the SBA being your best friend? In addition to all these resources they provide to small businesses, this is another reason why. The SBA is a huge advocate for American small businesses. They have great funding programs and advisory services, which include SCORE, and I encourage you to take advantage of them. For many small businesses, government assistance is going to be the main reason why they were able to survive this crisis. That's it. Thank you for your time and attention. Today's webinar has been brought to you by Community Investment Corporation. We help small businesses get SBA-backed loans. You can contact me if you have any questions, anything I can help you with. Before I turn it back over to Steve, let me say thank you to First County Bank for sponsoring this event and Fairfield County SCORE for hosting. Thank you.
Hey, thanks, Joe. That was excellent and short and to the point. I'd like to encourage all of the attendees now to just think for a second and go down to the bottom of your screen there on Zoom and choose the chat window and offer up some questions for Joe. We've got him on the line here. It's difficult to pin this guy down. He's extremely busy. I think there was one earlier, Joe, about when you were talking, let's see here, it was about, oh, you said that the other loan companies besides your company were EDCO, and what was the other one?
It's called CEDF, Community Economic Development Foundation, I think it stands for.
All right, okay. All right,
they're up in Meriden.
Yeah, okay. Now we need to make sure that we're offering several alternatives to you.
Correct.
So what does Fairfield County Bank work with CIC?
We work with all the banks in the state. Yeah, we've done deals with everybody. So, and again,
Yeah.
that's why we have relationships with all the banks. We know there's different banks who like certain types of deals and don't like other types of deals. So, if you need a bank, you come to us. You say, "Hey, can you help me find a bank?" Chances are we'll know the top 2 or 3 or 4 banks that you can go and talk to try to partner with.
Yeah, based on their circumstances, which
Correct.
are like lots of different circumstances. Okay, so Bob Tobias had a question here. Is it permissible to take out a new SBA loan, take advantage of the 6 months free payments to pay off the existing loan?
That's a good question, because one of the requirements that from EIDL was that you couldn't refinance long-term debt with it. Yeah, the nice thing is with our loans, you can do pretty much whatever you want with it. I mean, as long as you stick to whatever the original plan was that you said you were going to do with the money, you have a lot more flexibility on what you can do with that. So that's a really good question.
Yeah. All right, good. So Bob Tobias, if you want to have a follow-up, please fire away. So Jeffrey Selden has asked, is the $10,000 grant that was given out considered the EID loan, or is that separate? That's one question. Then, and is there a difference between the PPP and the PPE loans, and can you explain that? There's a lot of questions in there, Joe. You can read it too if you.
I see it there. Yeah. Okay. Let me just start from the top. So, when that $10,000 grant thing first came out, what the SBA said was apply for the EIDL and we'll give you $10,000. It said up to $10,000 actually. And so everybody's like, oh, great, $10,000. So everybody started applying for it. Well, they quickly decided that they couldn't give everybody $10,000. So they changed it and they gave you $1,000 per employee. That's the initial amount of money that they gave you, which was a grant. So in some cases, companies got, a lot of my clients got $2,000, $3,000, $4,000, that kind of thing. And so that was great. So that's actually an advance on the EIDL loan. You'll get the rest of it at a later point. So now the interesting thing about that is if you look at the PPP forgiveness form that I just told you about, they ask you if you got an EIDL grant, and if they did, they're deducting that from your forgiveness. So originally they said that money, you never have to pay that back, and I guess that's sort of kind of true, but maybe not really. The second part of your question here, the difference between PPP and PPE loans. I'm not familiar with a PPE loan. PPE usually means personal protection equipment. So I don't know if we're just talking mixing acronyms here. I don't know, but I'm not aware of any PPE loan that exists.
Okay. All right, great. Good answer. Good question, by the way. Any other questions for Joe? I don't see any.
Lorraine Dowdy had a question. In light of COVID, will the SBA change its requirements, criteria for startup business loans? Well, the answer there is we haven't changed ours, and our standards parallel whatever the SBA requires. So I think the answer there is probably going to be no. And I think that's the reason why that the government has been offering some of these supplemental programs like EIDL and PPP, is because they realize that small businesses in particular are going to need additional help. So, you know, in spite of all that's going on right now, I can tell you, CIC, we're making loans. We're still writing loans. We're still doing deals. And, you know, it's not like the spigot got shut off because of COVID-19. We still have a lot of good opportunities out there. And, you know, our goal, like I said, we're here to help people. And you need money to help you get going. If you have good credit and everything else, we'll try to help you.
All right, good. Thanks, Joe. Any other questions for Joe? I'm going to just kind of give you a minute here to think about them. And obviously, extremely important topic for all of you and us at SCORE as well.
I must have done a really good job if there's no questions.
Yeah, well, yeah, as you say that, but here comes, well, Lorraine says thanks, and then Jeffrey Selden comes in with it could be complicated. Maybe you can just, I'll read it to you and give you a chance to think while I'm reading slowly. So he's saying maybe he doesn't understand it properly, but he feels that he knows some business owners that got the PPP loan, and then some others got EIDL loans that were much larger than the $1,000 per employee at 2.75. Does that sound right?
Well, yeah, again, there's two things there. You're getting two sums of money from the SBA. The first is the EIDL grant, which again will be a few $1,000s. It won't be any more than 10 because the original language said up to $10,000. The next point, the next bunch of money you'll get will actually be the loan. And the loan, by the way, is at 3.75% interest. And what I've seen so far with all of my clients, the SBA originally said that they would amortize those loans out for as long as 30 years. Every loan that I've seen so far has a 30-year payback period. I have one client who got a $2,100 EIDL loan because her business had just opened within the last few months. So she didn't qualify for a large EIDL, but that $2,100, she's going to pay back over the next 30 years. It's going to cost her $9.75 a month for the next 30 years. So everything that I've seen so far has been 30 years, which is a really low interest rate and a really long amortization period. So it's a really attractive loan.
Yeah, wow, for sure. Good, Joe, thanks. Anything else? Anybody else have a question for Joe? Okay, so let's just remember that this webinar will be available tomorrow on fairfieldcounty.score.org. You can see our website at the bottom there. And again, SCORE, as many of you know, we offer free individual one-on-one counseling. So please use that link, fairfieldcounty.score.org, to visit our website and request a mentor. You're also going to receive an evaluation form at the end of this webinar. So please fill that out and we'll take it on site and act appropriately on it. It's very important for us to make sure we're offering you what you want and what you need. So I'm just looking here to see if there's any other questions. I don't see any. So on behalf of SCORE, I'd like to thank you for attending today's live webinar. And I think, as we mentioned before, our next webinar is kind of a beginner's guide to bankruptcy on May 26th. So you can see that and sign up for it at our website, of course. So in closing, a big thanks to First County Bank for their sponsorship and to Joe McCaffrey for presenting today. Joe has got lots of things going on, and to take the time to put this together and to present this, I really thank you, Joe, on behalf of SCORE and behalf of all of our clients. So,
my pleasure. Thank you.
You're welcome. And so, hey, listen, have a nice day. It's actually starting to feel a little bit like summer, finally. Enjoy your weekend. It's 3 days, although, as we all know, every day is kind of like blending together a bit here, but have a nice holiday weekend on behalf of SCORE. Thank you very much for attending. Bye-bye.